Prepare yourself for an exciting journey as we explore the mind of George Soros, one of Tesla's largest and most contentious investors. It's time to learn why Soros has been taking advantage of the recent price changes in Tesla stock, which have sent investors into a frenzy. Soros has tripled his stakes in the massive electric vehicle company, taking advantage of the decrease while many others have sold out of panic. Less traveled while stockpiling Tesla units come along as we examine Soros fund management and the thinking behind it in greater detail. You have the option to cash out your holdings or accompany the renowned investor and philanthropist George Soros on his travels. But in light of the price fluctuations of Tesla's stock recently, you might be debating whether, like George Soros, you should sell your holdings to the highest bidder or keep buying Tesla shares in the hopes that the company would continue to rise sharply until 2023. Anyway, good to have you back in the game. In spite of this, a recent regulatory filing reveals that renowned investor George Soros took advantage of Tesla's decline this past year and loaded up on shares of the electric vehicle maker, tripling his stake in the company in the last few months. This is in contrast to many other investors who have sold and are still selling their shares out of fear of losing out. Tesla's stock has been volatile for a long time, leaving investors with many questions. Established by George Soros, Soros Fund Management is a family-run business that oversees more than $28 billion in assets across numerous asset classes and investment approaches, including public stocks, fixed income, commodities, foreign exchange, alternative assets, and private equity. Bloomberg's Billionaires Index indicates the net worth of the Tesla investor increased by $1 billion as of November 22. A large portion of Soros' company's money, which he is well known for, is donated to the Open Society Foundations, a nonprofit that supports activists worldwide. In the second quarter, Soros revealed his ownership of Tesla stock, indicating that he may have started buying the company's shares between April 1st and June 30th. At that point, the investor controlled 29,883 shares valued at $20.1 million, which was the company's largest common stock. In the first quarter of 2018, George Soros' investment business bought a sizable amount of Tesla bots. Nevertheless, the buy was not an option position or merger target, as per an SEC filing. A group of investors called the Soros Fund Management Group invested $35 million in convertible notes, bonds that have the potential to be converted into a specific number of common shares, establishing the company as a significant supporter of the automobile. It was unexpected to discover that the family office has been a longtime shareholder in Tesla common shares, with that stake increasing significantly in recent years. As of March 31, 2022, there were only 2,000 shares listed as held, but as of June 30, 2022, there were 355,250 shares listed as disclosed, per a regulatory filing. Soros has tripled his investment in 3 months, owning 89,647 Tesla shares, valued at $164 million USD on the market. This is despite Elon Musk, the CEO of Tesla, appearing to be more focused on Twitter lately. Even though the price of Tesla shares has fallen and then increased recently, the company has always been thriving, according to a recent note from longtime shareholder Elon Musk. However, there have been concerns that the manufacturer is facing a decline in demand across various markets. Though the electric car manufacturer is immune to the Biden administration's Inflation Reduction Act, micro-competition concerns are likely to remain in the background as capacity rises. Tesla bear Citigroup, the electric car maker, is likely to qualify for a tax credit in 2023, allowing it to gain market share from its rivals. This tax credit will assist reduce inflation and boost Tesla's long-term competitive position, as indicated by Italian Michele in a hard landing scenario, according to recent speculations. In an attempt to boost output at its U.S. site, Tesla is moving engineers and production workers from its California plant to Vermont to start automating the production of its EVs. This will enable the company to produce cars at lower cost and generate demand in the future. Tesla recently installed state-of-the-art machinery at its Fremont, California plant because of the high level of automation of its production lines. The EV manufacturer has already predicted that it will average a 50% production increase over the next several years. Tesla has been able to significantly increase output at its Shanghai factory, where upgrades are credited with helping Tesla deliver a record 83,135 cars in China in September. The process took about 5 weeks and involved machinery maintenance and several other improvements. One factor that might outpace Tesla's demand is the large number of EVs. EVs are steadily upending the gasoline industry, and as gas prices climb, more drivers might look for less expensive options. According to a recent analysis, Tesla easily outperforms other electric vehicle makers in terms of earnings. Despite outselling Toyota Motors by more than 7 times during the July-September quarter, Tesla earned 8 times as much profit per vehicle. For the first time since going public in 2010, Tesla's quarterly net profit exceeded that of the Toyota Group, which sold 2.62 million vehicles in the quarter, minus 7.6 times, as many as Tesla's 344,000 cars. However, the Toyota Group's net profit per vehicle was significantly lower than Tesla's. As with any manufacturing company, Tesla will experience significant periodic fluctuations in its profit margin as it tries to keep up with the traffic expansion, exhaust gas turbochargers, global production, and Tesla may have steadily increased in stability and attention to key performance indicators, KPIs, such as free cash flow and earnings per vehicle sold. Despite Tesla's recent difficulties, the investor is not alone in his hope for the company and its stock analysts who have been following the electric car market. The most recent conversation between George Soros and Tesla may enhance the company's reputation in the eyes of investors. In a recent interview, American investor and fund manager Ron Barron forecasted that Tesla shares will be priced between $500 and $600 by 2025, and that the company would be worth $4.5 trillion by 2030. The market generally seems to agree with his predictions. The stock analyst connected his assessment target the annual car production of Tesla. He mainly concentrated on the company's ability to grow dramatically over the next 10 years and eventually begin selling about 20 million cars annually. While Elon Musk's Twitter antics provide concerns for Tesla investors, we believe the company's lead over competitors might widen, especially when easy prices for the IRA turn from inflationary to deflationary. This was mentioned by Adam Jonas. The stock market requires managers of funds with more than $100 million in U.S. equities to follow a document known as the 13F within 45 days of the end of each quarter to list their holdings in securities trend changes. Tesla is still on pace to grow sales by about 37% next year, in addition to piquing investor curiosity. We believe Tesla is in the strongest position among original equipment manufacturers to receive consumer tax and product action credits. Additionally, fund management teams may be interested in investing in Tesla if Soros buys a sizable number of shares. Since Tesla is now part of Soros Management Fund's 13F filings, more investors will be able to offer feedback based on Tesla's fundamentals rather than on sporadic price fluctuations. What do you think? Let us know in the comments below. If you like this video, please hit the like and subscribe buttons. I'll see you in the next video. The U.S. equity portfolio recently increased by 4.3% quarter over quarter to almost $5.9 billion.